In terms of challenges, I think the operating environment is a dynamic environment these days. Things are changing all the time. There are new regulations that are coming into force. Also, the changes around the participation levels from various stakeholders. So we have to keep on reinventing ourselves and get the game up and better each time these changes happen. But then the opportunity for us is that the India story looks good, and obviously we are looking to launch new products, particularly in commodities, where we have a big plan, and hopefully we can do well in commodities and other emerging areas.
How are you managing weekly options?
No, there is no need to manage anything. We have to just go with the flow as we see it. Because I think we have to operate with integrity at every point in time. I think if weekly options are not good for our own kids, then they are not good for anybody. So I think the level of participation, particularly from retail investors, has hit the roof in terms of volumes on expiry day, particularly. That's a bit of a concern. And we have also been talking about it. And our MD and CEO, Ashish, for example, has mentioned it in many, many speeches that retail investors should behave like investors, which means you do something today and wait for a couple of years and then reap the rewards of your investment and not behave like traders. So if retail investors start behaving like traders, we have a problem. So I think that's where the regulator has to intervene and make sure that the momentum is moderated.
How are you trying to increase market access?
Market access has been simplified significantly by the regulators. Actually, more than NSE, SEBI has been working based on feedback from all kinds of stakeholders. The objective is to make the market more efficient. There's no doubt about it. But at the same time, it has to be, ticking those mandatory boxes. India is a beneficial ownership market. So every investor has to have a securities account and a bank account, and only then can trading happen. So in a way, we are not an omnibus market where it could be very easy to set up and get going. Because of that, it is perceived generally to be a very difficult market to set up and get going. But that's part of the bargain.
What are the retail trading trends?
Retail participants have increased in the last few years. For example, in 2019, 2020, we were about 29 million unique investors. Today, that number is more than 105 million unique investors. So you can see that we have come a long way in terms of sheer numbers. And every single month, there are about 3 million new accounts being set up in the market. And most of these accounts belong to retail participants. One, we have far too many people coming in too quickly. And two, many of these new entrants to the capital markets seem to be looking for quick gains. Now, that's the cause of concern. And at NSE, we believe in investor awareness and education as a primary solution to all of what we are seeing right now. Obviously, options volumes have hit the roof in recent years, and retail participation, which used to be about 10-15%, is now 35% of the volumes and looking to grow further from where it is today. A part of the reason for this is also the easy availability of technology, of APIs and app-based solutions, which make it very easy for retail participants to access even complicated products like options. Many of them are just taking a chance, maybe on expiry day, speculating a bit, and in the process, if they have made a bit of money, they think that they can get away with murder every time in the same way. The regulator is worried about the downside impact of options. On a black swan event, for example, everyone can get cleaned out. So that's where the rules are coming from. So it's a balancing act that we have to do in these circumstances.
What contracts are they trading?
We have a number of stocks on the platform. We have about 3,200 companies listed on the NSE platform. Out of this, about 550 companies are very small. They are the small and medium-sized enterprises. There's a separate platform for them called NSE Emerge. On the main board, we have about 2,700 companies, roughly, that are the bigger companies, supposedly, from the overall number of companies. Now, if you look at the top 200, 300 companies of this entire large list, they are all good companies. They've been around for quite some time and they've been delivering good results. Now, on these companies, if one wants to buy and sell shares and make profits, for example, you need a lot of capital to be able to do that. And you need to wait it out patiently because the stock movements will take time. And that's the retail investor game that typically we have seen in the past. Today, what's happening is that people want instant gratification and instant results. So they're not ready to wait for 2 years. The youngsters of today want profits during the day in a few hours. So that being the case, people have moved on from cash equity, which used to be the traditional, investment mechanism, to futures and options. Futures were popular as well until some time back when the taxes were tweaked such that it became a little more expensive. And then people went into synthetic futures, which is a combination of options because options was cheaper. Now, in the options product, one can get significant leverage, and the amount of premium that one pays, particularly closer to the expiry day, is very, very small. So, by paying a very small premium, you get massive leverage, and that's the main reason why people are drawn towards options. And they think that this is a great way to maximize your opportunity and make money in a few hours. That's what's become addictive for retail investors, particularly. And the apps and the web-based front ends and the tools and techniques today make it all easy. Add to that the dimension of social media, where you have some influencers throwing in some strategies and claiming that these strategies really work. They produce millions of dollars of profits. Obviously, the excitement becomes that much higher for any new entrant who comes into the stock market. I think the game has changed, the operating landscape has changed, the way we operate today, everything has changed. Most of the trades are happening digitally. India has become a digital superpower, and we have leapfrogged many, many developed countries as well in the last few years. So everything is possible at the touch of a button or a few keys here and there, and the apps are so significantly superior these days. So people are, therefore naturally addicted to this whole thing.
Do you have single stock futures?
We have single stock futures on about 180 stocks now. Another 45 stocks are getting added by the end of this month. So we will have single stock future contracts available on 225 stocks roughly. And a few more will get added based on when they become eligible in the next few months and when they get approved from the approval from the regulator. The options world, on the other hand, is a little more liberated, one can say. And the cost of trading options vis-a-vis the cost of trading futures, it's obviously more advantageous to trade options. People want to optimize the usage of their capital, and that's where the expiry day helps them, because the expiry day is the day when the premium is really low, and which means you can get larger out of the same amount of capital if you trade on expiry day vis-a-vis any other day. And therefore, in India, we have weekly expiries, and we used to have, we still have one expiry on Monday, one on Tuesday, one on Wednesday, one on Thursday, weekly expiries. They are more or less being abused as if they were zero DTE contracts. And therefore, we are witnessing this huge spike on expiry day volumes, which is what the regulator is trying to arrest. Traditionally, investors used to trade cash equity and used to hedge their portfolio risk using futures as the instrument to hedge the risk. And obviously, they would tweak their positions on futures, on stock futures, largely based on what they perceive with each passing day. And because stock futures were not available on all the stocks, they went into index futures. And because index futures were expensive, they went to index options. And this is the entire evolution.
How do your risk management tools handle the higher volatility in volumes?
No, the risk management system in India as an ecosystem is very good. We have an online real-time risk management system that has stood the test of time. We are able to, so we have something called risk reduction mode for members. So members put up collateral and then they are allowed to trade. When they reach 90% utilization levels, we throw out the member because they are on risk reduction mode. And what they can therefore do is they can only square off their positions at that point onwards. They can't take fresh positions. If they want to take fresh positions, they have to bring in more capital. So this is being measured every single moment throughout the trading time. Therefore, I would say we are very, very safe in that sense. And at the end of the day, based on the closing prices of the stocks, the entire sheet is drawn up in terms of obligation from each member. And if there is more margin required, more collateral required, they have to deposit it before the start of the next trading day. Otherwise, they can't trade.
What are you doing to increase market integrity?
So we are, improving our surveillance mechanism, and we have introduced artificial intelligence in a few areas where we think we can get going. It's a lot of experiment that's going on right now. In terms of ongoing monitoring, we have tightened a number of things that we have been doing over the years, and of course, a lot of this has also got to do with regulatory guidance. The regulator SEBI has been very good in terms of making sure that the market is safe and secure for not just the investors but also for the issuers and the intermediaries.
How is the retail brokerage landscape changing?
So the retail brokerages, some of them came out with this discount brokerage model like the Robinhood, and these are platform providers in a way that used to charge zero fees for execution. And the reason why they could do that was they were receiving volume discounts from the stock exchange based on how many transactions they supply. We used to have a tiered transaction tariff until the 30th of September. The regulator recently changed the rule there and said that it has to be a flat fee from the 1st of October 2024, which we have implemented. What it means is that there is no upside for any retail broker anymore in India, and whatever fees they collect from the investor is what they have to pay to the exchange. So there is no upside in terms of volume discounts as such. So the space is now reinventing itself and figuring out a way to charge clients for the transactions such that they can continue to be in business. Otherwise, their revenue sources are significantly impacted.
How do you educate traders?
We do about 20,000 programs every year. A lot of it is physical in-person programs. We have a panel of smarts trainers. Smarts is a terminology coined by the regulator, and it's a certification. So a trainer who is certified under that program is then eligible to empanel with us. Quite a large number of such eligible trainers who are on our panel, and we keep doing programs with them across the length and breadth of the country. In addition, we also do tons of webinars, and we also work with larger organizations. So recently, the regulator SEBI has requested us to work with the top 100 companies in India and do investor awareness programs for all their employees. So that's one. We've also tied up with Zomato and Swiggy. These are two food delivery platforms in India. And recently we signed memorandum of understanding with both of these firms. And we are trying to educate all their delivery partners, the people who actually deliver food at each doorstep. So those are the guys who are probably in need of a refresher program or an awareness program on how to manage money, how to be careful, how not to click on the wrong link, and so on. So we keep doing that all the time in various ways and means.
What regulatory changes are coming?
The regulator, on the one hand, is trying to make sure that the companies on the platform are of the good quality, the best quality, so that no investor is, impacted in case there is an accident. The idea is to avoid any accident and make sure that only good companies come onto the platform. So they are tightening the eligibility criteria for a company to get listed, both on the main board and on the SME, particularly on the SME space where they think a large number of companies are coming onto the exchanges. Secondly, they are also focusing on corporate governance all the time. So if the companies are on the platform are good, then automatically half the problem is solved. That is a clear directional thought process. Apart from that, there are a whole host of things that constantly are being undertaken in order to improve efficiency of the market and the way the product looks. To give you an example, settlement cycles have got crunched in India. We were on T+2 mode until 2 years back. Last year, we went into T+1 settlement cycle. This year, we are beta testing 25 stocks for T+0. Next year, we may be live with T+0 for a large number of stocks. Right now, only retail participation is allowed, but we may open it up to institutions as well. So we are on the path where we want to make the market more attractive, efficient, and at the same time safe for everybody.
How do you deal with cybersecurity concerns?
We have a whole host of things that happen every day, 24 hours, and we have a big team that takes care of cybersecurity in entirety. And on an average, we have about 4 to 5 million attempts on a daily basis to attack the NSE system, which we are thwarting by God's grace. Up until now, everything's fine. But it's a relentless battle, and we have to keep on reinventing ourselves and upgrading ourselves at every possible step, because what worked yesterday may not work tomorrow, and what works today may not work the day after. So this is a constant challenge for all of us.
What opportunities do you see over the next 5 to 10 years?
India is in the middle of a massive growth phase, and a lot of people believe that India's GDP, which is about $4 trillion now, should be about $10 trillion in 10 years' time or more. The market capitalization of all the companies on NSE right now is about $5.5 trillion, and therefore we should be something like $12 or $13 trillion in 10 years' time. So the biggest challenge for us, or the opportunity, whichever way you look at it, is we need to double the market cap, or maybe more, grow more in just 10 years' time. We took 30 years to get here, 5.5 trillion of market cap. We had to bring about 3,200 companies to the platform to do that. So if you extrapolate that, maybe we have to bring on another 3,200 companies, and hope that the market cap adds up to about 12 trillion. But all of this has to happen just in 10 years' time. So it's a huge ask. But the good news is that in the last 12 months, between April 23 and March 24, we saw 240 companies getting listed on NSE. Likewise, from April 24 till date, already 150 companies have got listed. So there is a huge amount of momentum we are riding upon. And geopolitically and every which way you look at it, we are placed well. The Indian economy looks good. The equity story looks very attractive. And India has started receiving foreign capital once again in plenty. So I think a lot of things are playing in our favor. Hopefully in the next 10 years, if we make best use of the prevailing operating environment, we should do very well.